Welcome back, my passive income investors alike. In this video, I'm going to share with you the two categories of investors that exist so you can help better figure out how to get to your financial independence, retire early journey faster. Because if you don't understand these categories, you're probably going to be hindering your investment style and it could end up costing you capital down the road. Now, how does this relate to me being in a barn? Well, the first investor you're probably going to run into is the most famous kind of investor, because these are your Mark Cubans, your Kevin O'Learys of the world, the Shark Tank kind of active investors, people that are getting up to their knees in crap to try and figure out if a business is going to be successful for making a large investment. This is almost a full-time job in and of itself. Now, the second kind of investor is the one that you're probably going to fit into, and this is your passive investor. These are the people that don't have the time to be on the ground floor to do the due diligence that might be required for making large capital investments. So these are the kind of people that are going to be buying ETFs, much safer followed kind of investments. I'm going to kind of expand on this further, but let's head back into the studio so I can break this down, guys.
Drop it.
Before I deep dive into this and make some controversial statements, I want to further solidify what a passive investor is and what an active investor is. So passive investing broadly refers to a buy and hold portfolio strategy for long-term investment horizons with minimal trading in the market. Index investing is perhaps the most common form of passive investing, whereby investors seek to replicate and hold a broad market index or indices. So what is that? Well, there's no more famous investment out there than the Vanguard S&P 500 index, which represents the 500 largest companies in the US. So if one of them goes bankrupt, you still got 499 backing you up. And most of us out there would probably adhere to this investment strategy because we work 9-to-5 jobs, and you might want to come home and just spend time with your family rather than worrying about what your personal portfolio is doing. And this investment right here is probably responsible for making more millionaires aside from real estate than any other investment you could possibly make. Now, the other kind of investing that a lot of us are familiar with is active investing, which refers to an investment strategy that involves ongoing buying and selling activity by the investor. Active investors purchase investments and continuously monitor their activity to exploit profitable conditions. Now, before I really get into this, I want to talk about the third kind of investor that isn't an investor, but it's what most of us start out as, and that is traders. Now, I just want to throw this in here because I think it's important to recognize who we are and the differences in investment styles. Now, if you are day trading, let me just throw this out here, you are not an investor. Let me say that again. If you are day trading, you are not an investor. You are playing fundamentals, technical fundamentals that have nothing to do with the underlying company, and you aren't doing your due diligence on what these companies are or what they might do for you in the future. And this is how most of us start. And I'm throwing this in here because many of us are getting involved in Forex. If you are new to investing, chances are you've seen the hype game going on with Forex trading, which essentially is trading currencies. And this is really similar to day trading stocks, but all traders start with the dream to get rich quick. If that is your motive, which all of us have that motive, you're probably not going to do too well because you're chasing a carrot that doesn't really exist. Now, 40% will only last a month in this investment strategy, which I need to stop calling it an investment strategy. 80% quit within the first 2 years, and only 7% remain after 5 years. Now, if you actively engage in the day trading community, you'll notice that most of these day traders only make their money 2 to 5 trading days out of the whole year. This is not passive and this is not active investing. It is a part-time job where you're either going to find success or you're going to fail. And I have nothing against making money either way. I just know that most people will not get rich doing this strategy. And I mean, go ask Warren Buffett, go ask Mark Cuban, Kevin O'Leary. How did you get rich? There's not many billionaires out there I've ever heard of that made billions day trading stocks. If you do not have time to deep dive into companies and really do your due diligence and your homework and get knee deep in crap, you're not going to be probably successful at active investing. I'm going to tell you that right now. But if you are somebody who started a business, who runs their own business, a little bit more entrepreneurial, this will be a really good investment strategy for you because you will find success in and outside of the stock market. Now, you got to be really careful if you're new to this, because if you're trying to get into active investing, guys, most people make their first big mistake by following the herd. literally following all the sheep, because they're going to be the people that are listening and they're hearing about the MJ sector and what an explosive market this is going to be, but they didn't really do their homework and realize anybody and their grandmother can grow this stuff in their backyard. There's no proprietary products. There's no patenting, really. It's just the way the industry is. And now we're seeing a massive decline in this market where many people got burnt and turned themselves off against active investing. Tesla, in my opinion, might become another MJ sector. I got so much heat for this initial investment I made in Tesla because when I first made this investment back in the 300 range before 2019, a lot of people were lined up to tell me what a dumb, terrible investment that was. And you did not have to walk far on a CNBC website to have somebody telling you that's a dumb investment, only to watch my investment drop in half. So there needs to be some extreme stomach in your personal investments. And this is why you really, really need to be able to do your homework and make the time for this. Now, not saying that this can't become passive, because after you've done your active due diligence, like somebody like a Kevin O'Leary or Mark Cuban would, once you've set this up, you can pretty much walk away from it and just let it do its thing. But it took a long time for Tesla to come back before I started making money. And you have to ask yourself, are you able to stomach that kind of volatility? Because working in my own industry as a full-time magician, I have good and bad periods. There's times where I make a lot of money and there's times where I don't make money. And when I got into being a magician, man, even my parents were lined up to tell me what a bad idea that was. But here I am, a decade later, able to sustain a $20,000 to $30,000 a year income working 1 or 2 days a week, giving me plenty of time to actively get involved in other businesses. The other mistake most active investors make is they don't look beyond the stock market. You can get involved in real estate, of course, but you might even be better off starting your own business. Now, I'm constantly actively involved, not only in my stock portfolio, where I only hold about 14 positions, I think, as of right now. I'm running online businesses, and I'm also actively looking to purchase a business. Now, the problem with purchasing a business, because I want to talk about it so badly on my YouTube, is I can get fined. When you're getting involved in the private industry of buying businesses, it's like an auction almost, where you have to go in. They're going to send you a private list of businesses you can analyze, but you can't talk about them publicly because it could hinder a deal. I can actually get fined up to $20,000 any involvement I have in purchasing a business. So I have to wait until the deal falls through before I can share it with you guys. So consider slapping a like and subscribing, because I'm going to share with you some of these crazy things that I'm doing in the next couple months here. And I'm sure you've seen this with real estate investors on YouTube. Usually they kind of hint that they're making a deal, but they can't talk about it until the deal falls through, because you can actually get fined. Now, what investment strategy do I think you should be adhering to? To be honest, I think you should be actively attaining both. I don't think there's anything wrong with Vanguard index investing, but you're not going to find a huge amount of success. If you want to retire being a multimillionaire, you could absolutely do this simply with the index, guys. If you're putting $500 to $1,000 away a month over a 20 or 30-year time period, you're going to get very wealthy with that investment strategy. But if you want to get really rich and you want to find a lot of success, you're going to have to be really sucked into your investments. And after a while, you'll just become a professional investor, because that's what'll happen to you if you really get involved in businesses. Most of us dream of being these kind of active investors, but the problem is if you do not have the education or the understanding of knowing your limits, you are going to fail miserably at this. For instance, if I had to take you into that barn for you to raise those animals, do you understand the disease involvements of how to protect those animals? Do you know how to birth sheep? Because that's what's going on out there right now. Like, you probably don't. So it'd be the worst industry imaginable for you to get involved with. So if you are trying to be an active investor and you're buying into companies like Tesla with no real understanding other than the stock's been high flying, you don't know what their future might hold. You don't have a valuation mindset where you know what it might be worth 5 or 10 years from now, or have a general consensus for yourself. You're just gonna fail at this. And the way I kind of protect myself against this is I stick to industries I understand very well. A lot of people think I'm under diversified by sectors because I can't really invest in another sector I don't understand, because I can't have the foresight of what might be coming, but I can understand, say, sin stocks. And Warren Buffett is a big advocate of sticking within your realm of competency. You do not go beyond it, because you will make massive, massive mistakes. And these were the people that were investing in the MJ sector without competence. So if I can leave you guys with anything at all, it's ask yourself, sit down right now if you're investing and ask yourself, how much do I know about my individual stocks? Like, how much do you really honestly understand? In your mind, you're basically playing this game. And the only people that are going to find success are people that can navigate the maze and have intuition. And you don't have intuition without logic. You really need to fill up those facilities so you can navigate the full perspective of what's going on. Now, if you are a passive investor, this is probably the investment strategy that I'm going to recommend the most to people out there, because this is the one that almost guarantees success. It is very hard to lose money if you have a 20, 30-year time horizon and you're just buying passive index investments. Now, you can absolutely be both. And where I think you can get really, really wealthy is by turning active investments into passive investments. Now, I don't fully grasp real estate, like going out and buying individual real estate deals, but heck, you might. And if you're working a 9-to-5 job and you're saving up capital and you really understand real estate and you really love it, on the weekends, go out and look for a good real estate deal, buy it, and who knows, maybe you could find a value add, as they say, where you could fix it up and maybe turn it into a duplex and rent it out. And then all of a sudden you get it sustained and it becomes passive income. So you can kind of play in the realm of both of these, but I'm asking you to play in the realm of your own competency. And I'd love to know what you guys think about these discussions in that comment section below. I know this is kind of a serious talk, but it's one that I think we should have. So I hope you guys really enjoyed this video, but stay cool, stay awesome, and remember, don't follow the herd, lead the herd.